Good afternoon, everyone. Welcome to the midweek commodities update. So today we'll be looking at natural gas, gold, and silver, as well as we'll be also doing QQQ because it's during the week. And if you guys want to take a look at the mega cap tech stocks, all 7 of them, Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and Meta, take a look at the video from yesterday. I'll put the link in the comments below. And as well as you guys can take a look at the market breakdown from yesterday where I give you guys support and resistance levels to play off of. And if you guys want to look at the leverage 3x ETF, how to make money, $500 a day, take a look at a video from the Sunday. Also put a link below there. And let's get started on natural gas. So natural gas, today I will be breaking down the price levels and support resistance levels, as well as the trend changes, and give you guys a better understanding where the most likely scenario natural gas is going to be going. And let's get started. So take a look at the daily time frame. And so far it's looking good. I remember looking at this on Saturday and telling you guys that as long as we hold this 2.538 level right here, bulls are solid, meaning they have nothing to worry about because we are still in a weekly uptrend. And I'll go to the weekly time frame in a second after we finish breaking down this the daily time frame. So far, I'm seeing a falling channel. Let's take a look to see if it does look like one. That's going to be the most resistance, and this is going to be the support. So we can use these channels as our visual guides. We don't want to use them as trading off of them because anybody can draw these diagonal lines and shift them a little bit, and it'll be off. So it's a visual guide for us. As long as natural gas continues to chop in this channel, we will use it as a visual guide. Potentially, it may go down like this, but we seeing bulls playing a lot of defense lately versus something like back here. You can see every time we have tested a strong resistance, we fade all of its gains. But once we had that weekly uptrend that I mentioned a couple weeks ago, bulls are starting to shape up a much stronger structure. So as you can see, bulls playing defense whenever we hit supports. This 2.53 level is very key. You can see right here, support, support, resistance. Now we're above the action, so we're acting as support. I'm going to zoom into the 1 hour time frame to give us a better understanding of the shorter term time frame to see who is in control. So let's take a look. So bears had all their chances here. So you can see this was the initial drop, and this is the pivot, and they had the break here. So when this is where bears are supposed to follow through, right here. When you have a break of a key support level, they should have gone more follow through and break the trend lower, and as well as breaking more supports. But you can see bears could not break this support level after they had the first support level broken, and that was it. So this is essentially the psychology of saying bulls letting the bears prove themselves. So over here, and bears could not prove themselves. They did not increase their bear volume, and bulls just played defense and bought back the dip because you can see we only had one candle volume right there for this candle, and there was just no more bear volume coming in, and you can see just very lacking volume. No more bears wanting to sell. Essentially, nobody wants to sell here, and nobody wants to short here anymore. That's essentially what this price action is, because this was a bear flag right here. This is where bear should have taken it down, confirming that bear flag. So this was a bear flag, lacking follow through, and bulls bought it back up. And once we come back up here, we tested. That was it. Bulls took back over. Now we are back in a hourly uptrend. So even the shorter time frame is also favoring the bulls now. But the daily is still in a neutral trend. So this was a daily downtrend confirming. But now we have bounced back up. So we'll see if the bulls can. This is now a big enough room. Remember I talked about the size of the bounces and size of the drops? So this is now a big enough bounce where the next drop, bulls can now shape up that daily trend change. So we just drop a little bit and form that pivot. That would give us the daily uptrend confirming, because this is now a big enough move where we have room to drop and still confirm a trend change. It's favoring the bulls at the moment. Just like this drop was big enough where the bears should have confirmed this next drop, but they couldn't. Good sign for the bulls at the moment. That's why I keep talking about following the trend, because you don't want to fight a trend regardless of any stock that you're playing. I understand that we want to catch tops and bottoms sometimes, but you can try, but don't try too many times. You can try and just set your stop loss tight. And if you're wrong, just get out for a small loss and try again, but don't try too many times because those losses will accumulate. But so let's take a look at the weekly trend. So weekly, after this weekly trend change, it's been favoring the bulls ever since. You can see initial move up, drop, pivot, bounce, weekly trend change, and it's continuing right now. So on Saturday, I told you guys that we don't want to drop through this 50% on the Fibonacci. So this is A, bottom of the move to the top of the B move, A to B. Bulls don't want to see us retrace over 50% of that move right there, this mark, which also coincides with that 2.54 support. So when we have multiple indicators confluence in one area, that increases your probability of that support or resistance is going to hold. So that's what we got. And bulls also bounce off of this weekly 12 EMA, this tail looking line indicator, type exponential moving average, and 12, and now you get this line. So that is 3 signals showing us this is a strong support, and this at the 50% mark, as well as the 12 EMA support, all coincide in the exact same spot. So that increases the probability dramatically for it to bounce. Obviously, it's not going to be 100%, but that's what's the area on Saturday when I told you guys we should be bouncing, and that this area is needs to hold for the bulls. Otherwise, the chart would be starting to favor the bears. So we ended up bouncing, and now we are shaping up a continuation of the weekly trend. So now the bulls just need to come up and break the high, and we'll continue the weekly trend change. So the high is 2.87. If we do, take a look at the bull scenario if we continue to break these levels. All right, take a look. So if we do break this prior high right there, 2.87, we are looking at $3 is my guess. Because there is just not a lot of volume resistance above us after this 2.87. So that is what the bulls are hoping for. Obviously, you got to break that channel looking downtrend too as well. This could be, let's see if it's a 2-week bull flag. So let's go to 2-week time frame. We can measure from the bottom. I think we retraced too much for a bull flag, so it's a 50% retracement. But this, so once we break out of this channel, we pretty much just need one more green day tomorrow, and it will break out of it. And we're looking, once we break it out of that channel, we're looking at the 2.85 level right here from this top. And then once we break that, we are going back to $3. That's the bull case for me. And if we break $3, we'll probably get a smooth ride to 3.5. Not like a straight shot, one line up through smooth kind of ride, but it just won't be that many resistance until we keep up some resistance. Because psychology of volume is, for more volume, it is in one area, the more likely the stronger resistance is. So this is a smooth ride down, so meaning there's lacking volume. So on the way up, it's also going to be more smooth. What bulls are hoping for, and we'll see. So just 2 more key resistance levels to get over, this downtrending line and this level, and we're going to go to 3. The bears scenario, we want to obviously break this downtrending channel, bearish, and break that 50% mark at 2.54, as well as this low right there, and to continue that daily downtrend. See, this is a daily downtrend, and you want a continuation of that. You break above this pivot right there on this Wednesday high, 2.793, then it's back to a neutral trend. So we're pretty close in this range, battling bulls and bears, and we'll very likely see who's going to win very soon. We had some news today on natural gas. being more, I think it was usage this past time, and I think that was made the today green as well. But I don't look at the natural gas news that much because all the news is priced in to the price action. So essentially, the price action is all the emotions and news and everything that is in the price action that makes people click the button buy or sell, because those people usually are the people that already digested the news. And so that's why price action is always king, and indicators are usually lagging. So you always want to look at the trend and how the price action is currently moving. All right. So your bears break this level, we will be heading down to 0.47. And because that is the bottom of this range, 0.47, you'll get to 2.37. If you break that, then that would be a big win for you guys, because that would change the weekly trend change back to a neutral trend, because this is now the new pivot. This was the prior pivot for the weekly trend change. This was the prior pivot. This was the prior pivot. Every time is higher. So if next time we break below that 2.5, then that's a weekly trend change back to neutral. So that'll be a big win for the bears. So we don't want to see that as a bull. We want to keep our weekly trend change, because we still have a monthly bear flag, and we want the weekly trend change to continue to give us a big enough bounce on the monthly that we can start to shape up potentially a monthly trend change in the next probably 6 months. So we get another big candle here, and we need one more flat one, and another one lower, and another one higher. So we need probably at least 5 months for us to get a monthly trend change going. So because it's still a monthly bear flag, you can see right from the top, bottom, we haven't even gone over those 0.382. As long as it's below 0.382, it's a monthly bear flag. So bulls want to keep their weekly uptrend for us to have hope to change the monthly trend change and get back our daily trend change. But as of now, it's looking good because we have the hourly trend change in both favor of the bulls as well as the weekly. And daily, we have now a big enough bounce where now we can potentially shape the daily uptrend. And for bears, you just need to break this level for you to start to gain momentum from bearish side. And hourly trend will be you guys' guide. As long as hourly is an uptrend, bears aren't going anywhere. Bears had their chance here. We had an hourly downtrend confirmed with zero follow through. Bulls took back over. Keep a look at the hourly chart and you will be good. All right, let's take a look at UNG. It's a tradable ticker for NatGas. So very similar because they move together, and the level that bears need to break, same thing. It'll be this Friday's low, because currently right now it's in a daily downtrend as well. But now it's also a big enough bounce where they can potentially shape up that daily trend change as well. Weekly UNG is a little bit weaker because it hasn't confirmed a weekly uptrend. This is one move up. Now this is the pivot set. This is the very key pivot set. We can't, if bears break that pivot, it's still back in a neutral trend. So right now the bulls want to break above this pivot, this 7.83 pivot. And we do break that. That's the very first weekly uptrend confirming for UNG in a very, very long time, since any of us can remember. Yeah, it'll be all the way back to last year. All right. And so when you trade UNG, I'll be charting, you want to chart natural gas and UNG at the same time when you trade them. So oil is a 2x leverage for UNG. It trades exactly 1 to 1, 1 to 2. I mean, so UNG goes up 1%, oil is going to go up 2%. So you can see today it's up 4.5% because UNG is up. Let's see how much it was up today. 2.67%. So you times that by 2. So sometimes it's a little bit off by like 0.1 due to decays and all that kind of things. But yeah, so you times by 2. And KOLD will be down the same because it's short. KOLD is a short side. So it's down 4.2%. So you just times it by 2. And if you're on the short side, you're wrong because the stock went up today. So you're down on KOLD. All right, take a look at gold. Gold is in a falling wedge, bull break with lacking follow through. So you can see we broke out of this falling wedge we've been looking at for a while, and confirming the daily uptrend right there because we broke above the prior pivot. But there's just no full follow through. You can just see we came back to it and closed below this prior resistance. So bulls need to show up tomorrow for gold bulls to retest this 1940 for me. Let's see, we zoom in, take a look, see what kind of break is that. So this was looking good in the morning. Bull break, retest the prior support resistance. Now we want to retest the support, bounce off of it, and then just starting to look bad here. We break, bull break, lack follow through, but still holding that prior resistance, prior strong resistance over here, and now it's acting as support. So still have a chance for the bulls. Now we just gotta retest it again. If you break below this, then that's a red flag for me. That'll be a bull break, lacking follow through. At the moment, it's still holding above the resistance level. Our resistance now acting as support, so that's a slightly good sign. And as long as tomorrow we retest it. Right, let's take a look at silver. Silver, same thing. See if we can go moves together. This is even more clear of a bull break lacking follow through. So daily uptrend, breaking out of this falling wedge, been looking forever, give it all back. So that is very a little bit of a red flag for me. Silver looking a lot more red flag than gold. Bull break and sold it all off. This is an hourly downtrend confirming. Still holding above the falling wedge, but it gave it all its means back. It's just what it is, because we've been trading this falling wedge for how long? For at least April to now, okay, three and a half months, right? If we have a 3.5 month pattern breaking bull, you don't want to see it sold everything of it off in the same day. That's like a most biggest red flag for you bulls. But you still have a chance tomorrow because we didn't like sell off and come all the way back in here and close within here, right? So we still have a chance for the bulls to up tomorrow and negate it. You bears, just take it back in here, close back in here, and you will be waiting for you bears. And you're probably coming back to the bottom of this falling wedge range again to retest it if that happens. You bulls, you want to break today's high, this 23.38 high, because that is the high. All right, let's take a look at. All right, the last one, QQQ. So we're going to be looking at the market overall, and QQQ right now. This is my visual guide for equilibrium possibly forming up. So this is going to be resistance line, this diagonal looking line, and this is going to be the support. Although the support one only has 2 touches, so I'm going to call it a visual guide because usually you want 3 touches for it to be more valid. You can see this is roughly 2. Although you can say this is resistance, so 1 and 2 bounces, you can say that makes it 3. But I want to see 3 bounces off of it. So this will be a visual guide for it to be equilibrium, potentially shaping up and tighten up into potentially next week before it decides to break. Possibly, we probably would break up to the upside if we get really good CPI data tomorrow, and we'll see. CPI would be 6:30 a.m. PST in the morning, and that would probably dictate what the rest of the market is going to do for the rest of the week. We also have bank earnings on Fridays and PPI data also on Thursdays. All right, so what's the price action here? Price action for the last 3-4 days has been bulls just buying the dip, and also intra-sector rotation of money leaving bigger tech stocks into smaller caps and growth names. So that is a very good sign for the market because that is increasing breadth in the market, and meaning a bull market is how usually starts with just very condensed names, and then it shifts to smaller caps, middle caps, then it shifts to small caps. So So that is a good sign that money is continuing to be rotating in the market as market goes up, and especially when we start to see the smaller caps, the legger players that hasn't been moving at all, starting to move now. So it's a good sign for the bulls as long as if you just stay sideways and then the rest of the market continues to go back up, increasing its breadth, then QQ is very likely gearing, QQ and SPY is very likely going to be gearing up for the next move up once it finishes going sideways. So let's say we go like this. Let's say we tighten up into August, right? Continue to jump sideways, coming in and out, and then while the rest of the whole market goes up, like the financial sector, the healthcare sector, the IWM, growth stocks, right? All these, the Chinese sector, all these things keep continuing to go up. Next thing you know, QQQ is probably going to break out onto the upside. That would be the most likely scenario, because I have not seen all major sectors drop to the low of the day in probably this entire year. Maybe like one time here, this day, and this day as well. Than that, I've not seen all major sectors drop to the low of the day together. That is what bears want to see. That is what fear looks like when money is leaving the market. But if money is just rotating around the market, let's say the QQQ is slightly red and SPY is green and IWM is really green, that is just money rotating around and it's good for the market. So what's the most next likely scenario for QQQ? You can see all these dip buying right here into this above the 12 EMA, bouncing off of it, and QQQ can't even break the 12 EMA. Bears really aren't going anywhere. As this was a daily downtrend confirmed with absolute zero follow through from the bears. Up. So QQQ is still holding really strong, and you can see. Remember yesterday, all the mega cap tech stocks I was down roughly 1 to 2%. QQQ ended up closing flat. That is how much money was rotating to the other names, being able to withstand the 7 biggest weightings of the market while holding up the market to be flat. That is a lot of money rotating around. So that's definitely no fears at the market at the moment. Obviously, tomorrow, if we get like a really bad print CPI, everything can change, but we don't have that data yet. So we don't want to be just playing based on hope, or, if you're just shorting the market here, hoping that tomorrow's CPI is going to be bad or not, right? And that's not really viable strategy for the long term. So we will look at who's favoring the hourly chart. So hourly chart as well, this was also where bears should have taken the chance to also go lower. This was hourly downtrend confirming, as well as that daily downtrend confirming that I showed you guys earlier. We should have been able to come down here to 361s when this broke right there. And bears couldn't, so we bounced. And they still have another chance because this was still lower. This was still forming that lower high on the pivots. Tried again this morning. Couldn't even test it, go lower. That was it. That was the end for the bears because didn't even make a new low versus this prior low. Bull just took over. Bull just back the trend. Now we have an hourly uptrend just in one day at the bull's favor. So my guess is we're going to come back up here to test this 369 to 370 zone. Also coincides with the top of this edge. That is my guess. Obviously, CPI is going to dictate everything tomorrow, right? If we get a flat one where we see the numbers as expected, then it won't matter much anymore. It will just be whatever the day is going to be. It's going to be, right? But if we get a bad print, then all of this is over. It's probably going to go down here, retest this level. Get a really good print, probably break out. So who knows? But for technical wise, right now we are in an hourly uptrend favoring the bulls because bears had an hourly downtrend in their favor and they didn't take advantage of it. And there were just no bears in the market at the moment. It's the psychology of breaks with no follow through. When there's a break and no follow through in one direction, you want to look at the other direction. Right. So I got you guys for today's breakdown. So if you guys want to take a look at the 7 mega cap tech stocks, take a look at the video from yesterday. I put that in the comments below. And feel free to ask any questions. If you guys got any questions, comment below as well. I will see you guys and tomorrow for daily market breakdown. If you have to subscribe, you guys made it this far, and hopefully CPI data will go in you guys' favor. Have a great rest of you guys' day.